The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority podcast. Good morning, everybody. This is Bakes, Kevin Baker, Stock Market Authority. Have a wonderful Thanksgiving. I want to get that out of the way so I don't forget. What's in this for you? Economists can't pick stocks, and I'm going to teach you how to ignore the headlines and ignore the economists and get to what really makes money in the stock market. We're going to open the mailbag. Have a special one today. Good friend of mine, son has a project that he's working on, so we're going to talk about, my book, Sprott Uranium Miners, URNM. We're going to Greyscale Bitcoin Trust, Grayscale Ethereum Trust, and we're going to go through the Stock Market Authority portfolio, my search for the 10 best ETFs so that you and I can make money every year like we did last year when everybody else was down. But right now, today's top story. I started this in the middle of COVID 3.5 years ago so I could, frankly, have an excuse to talk to my boys. They're up for Thanksgiving. They couldn't make the show. It makes me a little sad, but, just a quick aside. Faith, family, and friends, those are the top three, and finances are a distant fourth. So happy Thanksgiving to you and yours. We're not going to take ourselves too seriously, but we are going to try and make some money, and let's get right into it. I say this all the time, and the reason I'm bringing this up, economists can't pick stocks, is I listen to this. I can't tell you how many podcasts. I've got to be, 40 a week, something like that. And there's recurring theme where people, have to talk about the big picture and have to sound smart and have to have fundamental rationale for why they either are underperforming or own particular stocks or avoiding particular groups. And I sit there and I've become jaded. I've been doing this for 25 plus years. I have never met anybody who could go from 30,000 feet and say, I think this about unemployment or interest rates or the deficit or jobless claims or whatever, and then tell me how to make money. That's all I care about. And that's where I focus on it so much. And so if they don't come with a sheet of paper saying, I took these economic inputs and produced this money, these results, I don't care. And you shouldn't care. And by the way, they're not going to give you that piece of paper because it doesn't exist. So, that's why I read the paper with a very jaundiced view, if you will. Some of this comes down to, this is the first thing I came up with, but I could have come up with 30 different ideas. This is economists' recession calls at the beginning of the year. And there was a 60% chance of recession from well-minded, well-intentioned, very bright, and very impressive people with a lot of letters after their names. But 60% chance of recession, and it still has not happened. And may never happen. And if you were one of these people that said, the recession is coming right around the corner, and somehow found these are the stocks I'm going to buy, here are the stocks I'm going to avoid, you got your head kicked in. And I don't want your head kicked in. And so I don't want you to listen to economists. Yeah, listen, I have economic views, but I put them over here to the side, and then I go look at what the market is telling me, which is in the charts, and say, here's where things are good and getting better. Here's where things are bad and getting worse, and respond accordingly. And I hope I've impressed upon you that there's so much to do that you don't have to take an economic viewpoint, express it, and try and fight the market. It's no fun. It's no fun. So, I listen to the economists. I'm respectful. But at the end of the day, if it doesn't answer the question, how do I make money, I kind of don't care. And you shouldn't either. And so all these recession calls, I juxtapose that against this. The S&P is up 18% this year. So all the people that said the recession is coming for all these reasons, interest rates are up, oil was a problem, Ukraine, the list goes on and on and on. The stock market is not the economy. They're two different animals. Frankly, the stock market anticipates the economy. It's a discounting mechanism. And people interweave these all the time, and I think it's a huge mistake. Huge mistake. COVID's a great example. The economy was going down the tubes, the market was ripping because the Fed flooded the world with money. And so if you listen to the economists, you're going to have a big problem. I'll give you some other examples of the kind of things I'm hearing. China, the demographic, the birth rate is down. The property fiascos at Evergreen and what have you, Evergrande, sorry. Those are going to lead to problems. So that means that, and then they get into sort of butterfly wing explanations. Well, that means that oil demand is going to go down, and that means copper demand is going to go down, and that means it's going to be inflation, and you want to avoid these groups. And I just haven't seen it. Credit card debt here in the U.S., that's hitting new highs, and that's the reason people are saying you have to buy these stocks and avoid these stocks. The inflation rate this past week hit 3.2%. That was expected to be 3.3. If you had given me the paper the day before and they said, listen, the number's going to be 3.2 and we're expecting 3.3, I couldn't have predicted, nor could anyone have predicted, the kind of action that you had in stocks last week. So avoid the butterfly wings, avoid flying at 30,000 feet and thinking that that's going to come down to what works in the stock market. That's why I go through charts first. And I like to have charts first, and then I go find the fundamentals that make sense to me. I want to be involved in big trends that are going forward, and no economist has ever led me to that. So I hope I've impressed that upon you. I hope you come here, bring your chart ideas, your chart questions, and we all make money together, because that's what I try to make money every year. My goal is very, very simple, and I do this to guide my sons with all the mistakes that I've made over the last 25 years. I don't want them to make them. I don't want you to make them. So I hope I've done a good job with that. You let me know. Please go to my website, stockmarketauthority.com, sign up for my free newsletter, and I bring intro week all these crazy thoughts that pop into my heads outside of the great half hour that we spend here. That's today's top story. Now it's time to check the mailbag.
Incoming! There's a letter in your mailbox.
You got mail. My vanity aside, I got to put my reading glasses on. This is Brian from Westwood who texted me this. He's become a good friend. And by the way, my number, 610-331-4283. Fire ideas and questions at me. I love this stuff. Okay, Bakes, here's your trivia for today. My 16-year-old son has a market dynamics class at Westwood High, and he has to pick 3 stocks that they'll track over the next 90 days to measure growth. This is simply a classroom learning exercise where they get a fake $25,000 to invest in 3 stocks, 1 ETF, 1 crypto. I'm trying to learn from your podcasts and emails which direction to go. Any fun picks? Looking for something that would spike in the next 90 days. Appreciate that. Thanks for including me in this. And I have to come right out of the gate and say, don't do this in the real world. 90 days is too short a period of time, and it isn't the prism through which I view stocks. But I'll play along just for fun and do this. I want to hold these stock groups for 1, 2, 3 years and really make money compounding over the long term. So with that caveat aside, I'll follow the assignment, Professor Brian. This is what I did. I went through my 3,300 plus ETFs, and then I was hoping to find a group, and then you go dig underneath the surface, and this 1, 2, or 3 individual stocks would be fantastic. And I don't find it. I don't find it right now. But let me do the next best thing. And I am talking my book, But I look for something new to bring to the table, and these are still the best looking ideas that I have. So this is the Sprott Uranium Miners, URNM, and I'll guarantee you, your son's going to be the only one that brings this to the table and to the classroom. This is no Peter Lynch, meaning Peter Lynch wrote up one up on Wall Street and, buy what you know. And lately that has been, you buy Tesla or you buy Lululemon or you buy Chipotle. And, there's a time when that works, but there are long periods of times when it's a horrible strategy. So I just go with what I see, and the uranium story is very much intact. Given the time frame, I'm very confident about the next 3 years. I'm not as confident about the next 3 months, but I think we get a good shot of this working. Very quickly, I know this, I've covered this before, but for this particular question, the uranium story. Fukushima was flooded by a typhoon in 2011. That's a Japanese nuclear plant that had the dampening effect that you would expect it to have. They shut down that plant. Germany banned all their plants. The nuclear energy industry just went dormant, and supply ballooned, prices collapsed, and everybody closed their mines. That has since changed. We went from $73 spot price for uranium, the metal itself, down to $18 at the COVID low. We just took out the $73 high that took 12 years to get there. So this is not a long-term phenomenon. That's why I think the next not a short-term phenomenon. That's why I think the next 3 years bode so well. We're now at $80 spot, and all these miners are going to have their higher prices, top line explode, and I think the bottom line explode even more, and the stocks are going to go up a lot. There's a lot more on my YouTube channel, and Brian, I'm going to send you to forward to your son some of my back to basics, where we talk about my fundamental process that dovetails with the chart. But uranium is going north, the uranium miners are going north, and I think that it will be a really good bet for even the next 90 days, given the price action that we're seeing. Next is the Greyscale Bitcoin Trust, GBTC. And these are just, I try to cover the top left of my chart service, so I'm looking as objectively as possible. This is a very, very attractive chart. You look at these arrows that I have down here on the bottom. I'm looking for this all the time. I want to see up volume beating the down volume, and I want to see new highs and positive price action going up in a staircase, and that's exactly what we have here. We're up 35% of this, maybe a little bit more. The relative strength is 99, so it's beating 99% of the stocks that are out there. We are going north. I think it's because the government is absolutely out of control with spending, and people are going to say, instead of debasing the dollar, I'm going to have some Bitcoin, even as a hedge. And oh, by the way, it isn't just a U.S. phenomenon. If I'm in a country like Argentina, I want to have some Bitcoin. And if I'm anywhere around the Gaza or Israel, I probably want to have some Bitcoin just as a hedge. So I think this is going to work. The discount on this is probably going to shrink as it gets converted to a spot ETF, which is very likely to be approved. A lot of good things going on here, and obviously it's a beautiful chart. I feel the same way about Ethereum. The Grayscale Ethereum Trust is looking absolutely beautiful. I think it kind of dovetails with the bond market, the yields breaking out of that 40-year downtrend that we talked about. ETHE is the symbol. These are all buys. If I didn't say that before, I apologize. URNM, GBTC, and ETHE, and let me know, but I bet you in 90 days you're going to have one, whatever prize they offer for that contest. So I hope that's helpful. Please fire away with any questions that I can clarify. That's it for the mailbag this week. If you want to write in with questions or comments, bakes@stockmarketauthority.com. I love voice memos, so please record a voice memo, attach it, and we'll play it on the show. And again, my number is 610-331-4283. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio, and I'll give you this week's Bakes Takes. You're listening to Stock Market Authority. Hang in there. We'll be right back.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
And now it's time for the Stock Market Authority portfolio. We're back, and we've been talking about economists can't pick stocks. And let's go through the portfolio. Bottom line, I'm crazy to do this, but I can't stop now. So we've got 7 winners and 3 losers. And I always like to impress upon that because when I talk to you and you show me your portfolios, there's always 1, 2, or 3 bombs that are in there that are decimating the portfolio. If you cut losses and let your winners run, this is a lot more fun and you make a lot more money. And I will teach you to do that if you stick around. We're up 18.53% since we started this in the middle of COVID, which also seemed crazy to me. We're beating the hedge funds by 2.7 times. This year we're down 9. We got work to do to keep our record going. I like our chances. We try to make money every year, and so far so good. And my end game is eventually I'd love to have a Bakes ETF, and it'd be your personal hedge fund. You have the S&P 500 over here, and you have the Bakes fund and or the Stock Market Authority fund. I haven't got a name yet, and it buttresses you the 30% of the time when the S&P is down. And everybody says, oh, dollar cost averaging and buy. And do that, especially to you younger people, because the stock market goes up 8% a year. And if you keep buying, you're going to wake up one day with a heck of a lot of money. The problem is our emotions get involved, and I've been there, and I've seen crashes, and I've seen panics, and all of a sudden, all this intellectual argument about the long term and the 8% goes out the window because people are human beings and they react accordingly. So I hope I'm of service to assuage some of those fears. Anyway, we're 24% uranium, we're 7% oil and gas services, we're 4% AI, robotics, tech, and given what's going on with Nvidia, we'll talk about that. That seems like it's the right way to go. We're 14% Bitcoin, so I'm eating home cooking as I talk about the mailbag recommendations. They're not recommendations. This isn't financial advice. You're smart people. I don't know your financial picture entirely. All I do is say, here's what I like, here's what I'm investing in. I'm suggesting to my boys that they do it, and I invite you along for the ride. So I can't be more congruent or transparent if I tried. 10% in Egypt, 10% in Ethereum. We're 7% short real estate. We're 4% short Russell 2000, the small caps. Probably going to be building that up. 10% in Pakistan and 8% in cash. Very eclectic and unique portfolio, and that's intentional because this is my thesis is there's so much to do. The ETF industry gives us 3,300 arrows to pull out of our quiver so that we can make money every year, and let's go do it. And that's why I get up in the morning. So I go through recent improvements in my newsletter and social media posts. Please subscribe and share. That's how we're invested as of 11/22. Holy cow. Unbelievable. Let's get into this week's Bakes Takes. Several takes. Number one, I'm already reaching out to college student-managed investment funds to teach how to sell, how to read charts, and how Wall Street really works, which I really think I bring to the table. And I'm hoping that, Brian, your son will have, if there's other programs like this in other high schools that are teaching things like this, which I really applaud, because I sure as heck didn't get this in high school. I love coaching young people. It makes me happy. I've got all these battle scars. Someone should get some benefit from that, and I'd like to do that. So please, if you hear this and you have any connection to that, let me know. I'm going to be offering a premium Substack and a premium course where I focus on your stocks, your ideas, your situation. There's going to be a lot of free content that's more general, but then for your specific things, I'm going to have it in the premium service. So please stay tuned. Need to get to cash flow positive, and I need your help. So please do so. J.C. Peretz has become a friend, and I really like his work. He's with All Star Charts. I reference him a fair amount of the time. He's on a great podcast called Trends with Friends. Howard Lindzen, Phil Perlman, and it's just there's nuggets there every single week. It's one of the must listens that I bring I usually comes out Saturday morning, and I stop everything I'm doing and listen to it. So it's really, really good. He tweeted this out today, and I wanted to bring it to your attention. The realities of the presidential cycle. Now, this is the average over time, but you can't argue with it. The similarities are there. This is about the time of the year when stocks should start going up. So I'd be leaning to the positive a bit more than usual, given this historical tendency. And so when I go through my 3,300 charts, this gives me a little bit of an influence. I don't want to go crazy with it, because I always want to have the individual stock chart and my rationale and thinking be the final arbiter of what I want to invest in. But I want to recommend JC. I want to recommend All Star Charts. I want to recommend Trends with Friends, and take a look. At least follow him on Twitter, because he has some really, really insightful ideas every single day. Microsoft. What a week it's been. This, to me, is the best of, I call it the Modest Five. I think the Magnificent Seven are dead. Tesla and Apple are sells, and I'm not being vague, because this is the way I do this. The news this morning is the Sam Altman, the CEO of OpenAI, was fired by the board, was going to bring almost everybody from OpenAI to be working inside Microsoft at the same compensation. The board, they changed the board. I think at least two of the people are leaving. I don't have all the details yet. There's going to be certainly a new chairman. So Sam Altman is going back to OpenAI, and the 500 plus people that signed a letter saying change the board or we're all going to leave, they're going to stay at OpenAI. OpenAI was a $90 billion valuation the last time they did a round, and Microsoft owns 49% of it. And so this partnership, if anything, has become even stronger and more valuable after all these events. And Satya Nadella, the CEO, ought to be cast in bronze, because he basically found a way to make it heads I win and tails I win. And good on him. The stock hit new highs on big volume. I don't like the way the chart looks. It doesn't have that staircase profile that I seek all the time. But given the fact that it was a crazy knee-jerk reaction to these news events with Sam and the OpenAI board over the past week, I kind of get it. But I think they're clearly one of the winners in AI and became even a bigger winner. Is it cheap? No. It grows at 15% a year. Now, maybe that number is sandbagged, and maybe AI makes that number go up. But this is a $3 trillion company. How fast can the growth rate be? As soon as I say that, I kind of say, you're tempting the stock gods to make you look dumb. But I just said it, so there it is. The PE is 36, and it's not cheap. Now, everybody and his brother has to own it, and probably has to be overweight a little bit, so that they hug the index and they can work next year. So it just strikes my point about this. I did have one. This is the best of the modest five now. The volume is confirming the price action the way that I like it. That's why Tesla and Apple have become sells, because that's gone the wrong way. This is one of the generals that's really standing tall, in my opinion. Now, the reason I bring that up, that's a segue to Nvidia. Nvidia, again, I tempted the stock gods, 2-3 weeks ago, and they said it was getting heavy. And that was around 405, and then it goes to 500, and I looked dumb. But it did look heavy to me, and still does. What I see here in the bottom, I put these arrows in, these two arrows, the volume is picking up on the down days. And what I said was that the earnings report, get your popcorn, the earnings is going to be very, very interesting. I'm listening to it on my Borsa app, which I recommend, BORSA, where you can get the earnings call in a podcast format. And what basically happened, and what I said prior to the call, and it's on there, so I'm on the record, I'm leaning towards it being a buy the news, sell the rumor kind of event, given the price action that I saw prior to this, the way it was acting heavy, and the expectations that were built in, given all the commentary that I've been hearing. So what they did, they came out with $18 billion in revenue. 16 was what was the analyst estimate. The whisper, what the street was really looking for, especially the buy side, was $20 billion, and they're taking the stock down 3% today. Nothing cataclysmic, but it looks to me like this resistance at 505 is going to be really tough to get through anytime soon. And I keep saying that if earnings don't drive a stock up, what the hell will? And that's, I think, playing itself out today. So the stock was unchanged as I typed this, and now we're down 3% the last time I checked. So do me a favor, please go to my website, stockmarketauthority.com, sign up for my free newsletter. You get my how to sell video, which nobody else talks about, and those are my bakes takes for the week. As we close out today's show, I always like to end with some much-needed levity. And please click on the link in the description below. And this is Jim Breuer, who I think is really funny. And this is him doing the hokey pokey, but in the style of AC/DC. And it is really good stuff. Do me a favor. That's it for today's show. Tell me what you want me to talk about next week, please, because right now I don't really know. Go to my website. Sign up for stockmarketauthority.com. Please sign up for my free newsletter. Bobby and Jack, I love you. Suze, I love you. Mom and Dad, I love you. Remember, it's faith, family, friends. Finances a distant number 4. Happy Thanksgiving to you and yours. God bless. See you next week. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.